Most people think making money online is all about selling products or starting a side hustle. But what if I told you that there's a way to build wealth without having to chase trends, hustle every day, or risk it all on the latest, get-rich-quick scheme? Here's the shocking truth. In 2020, Warren Buffett, one of the world's most successful investors, made $45 billion by simply buying and holding stocks. That's not magic, it's smart, value-driven investing. The best part? You don't need millions of dollars to get started, and you don't need to be a financial genius. All you need is a strategy. Value investing is a proven way to make money online, and it's something anyone can learn. Even if you don't know the first thing about stocks, this guide will break it down into simple steps that you can start using right now. In this no BS guide, I'll show you how to spot hidden gems in the stock market, avoid common mistakes, and build a strategy that doesn't rely on luck or timing the market. By the end of this video, you'll have everything you need to start growing your wealth the smart way, step by step. No hype, no fluff, just real investing tips that actually work. Ready to change the way you think about money? Let's dive in. Chapter 1. The myth of get-rich-quick schemes. Why patience pays. We've all heard the stories. Someone buys a stock, it skyrockets, and they cash out with a huge profit. It's easy to believe that value investing is just another get-rich-quick method, but nothing could be further from the truth. The reality? Value investing is about patience. It's about waiting for the right opportunities and letting time work in your favor. A study by Nobel Prize-winning economist Eugene Fama showed that markets tend to reward long-term investors who can stomach volatility. But here's the kicker. Investing for the long haul isn't flashy, and it doesn't make for good headlines. Think Warren Buffett. His first major success came in the 1960s, yet he's still investing today. Patience is his secret weapon. If you're looking for fast gains, you'll likely get burned. Instead, value investing builds wealth over time, one smart decision at a time. Warren Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." The lesson? Stay calm, stay smart, and trust the process. Chapter 2. Stock picking for the everyday investor. How to find gems, not junk. Most people think you need insider information to pick the right stocks. That's simply not true. Anyone can find great stocks by focusing on key fundamentals. Start by looking at the price-to-earnings ratio, P/E ratio, which shows whether a stock is undervalued or overpriced. If you see a P/E ratio below the industry average, that could be a signal to investigate further. Don't forget the return on equity, ROE. A high ROE suggests that a company is making the most of its shareholders' investments. You don't need to be a Wall Street insider to understand these numbers. Take Apple, for example. In 2003, when Apple was just a fraction of its current size, it had a solid balance sheet with minimal debt and an incredibly loyal customer base. Fast forward, and you know the rest. If you focus on financials, you can pick stocks that most investors overlook. It's not magic, just smart analysis. Remember, it's about finding hidden gems, not following the hype. Chapter 3. Avoiding the herd mentality. How to bet against the crowd and win. The majority of people invest by following the crowd. When everyone else buys a stock, they jump in, too. But the reality is that the herd is often wrong. Peter Lynch, one of the greatest investors of all time, said, "The key to making money in stocks is not to get scared out of them. When the market freaks out, it creates opportunities for those willing to stand apart." In 2008, during the financial crisis, many investors panicked and sold their stocks at rock-bottom prices. But savvy value investors saw this as a chance to buy cheap, high-quality companies. Stocks like Berkshire Hathaway and Johnson & Johnson became even more undervalued, and those who bought during the panic ended up with huge returns. It's often counterintuitive, but going against the crowd can lead to big rewards. Value investing is about being rational when others are emotional, sticking to your strategy, and staying calm. Remember, just because everyone is buying something doesn't mean it's a good investment. If you're finding this guide helpful, make sure to subscribe for more practical investing tips that you can use today. Chapter 4. The power of dividends. The silent profit maker every investor overlooks. Many people think that the only way to make money from stocks is through price appreciation. But there's another, quieter way: dividends. Dividends are payments companies make to shareholders, usually in cash or stock, as a way to share profits. Over time, reinvesting dividends can create a massive compounding effect. Consider Coca-Cola. Since the 1980s, Coca-Cola has paid consistent dividends. If you had invested $1,000 in Coke and reinvested your dividends, your investment would have grown to over $15,000 today. That's the power of dividends. Research from NerdWallet shows that dividend-paying stocks have historically outperformed non-dividend stocks by 2–3% per year. Dividends give investors a steady income stream, even when the stock price doesn't move much. In short, don't overlook the small stuff. Those regular dividend payments can add up big time. Chapter 5. The Mental Game. How to stay cool when markets go wild. Investing isn't just about numbers and charts, it's about mindset. The stock market is emotional. It goes up, it goes down, and sometimes it can feel like a roller coaster. The trick is learning how to stay cool. In his book The Intelligent Investor, Benjamin Graham advises investors to focus on the long-term value of a company rather than getting caught up in short-term market noise. The market is full of emotional reactions, and that's where value investors can capitalize. For example, during the dot-com bubble, investors poured money into tech companies with little to no profits. Those who stayed disciplined, avoided the hype, and focused on companies with real value were the ones who came out ahead. One thing to remember is that emotions are often the enemy of good investing. When stocks drop, it's tempting to sell. But if you've done your homework and know the fundamentals, staying calm will often be the best decision. Chapter 6. Value Investing in the Digital Age. How to use tech to your advantage. Technology has changed everything, even value investing. In the past, you'd have to rely on paper reports and complex formulas to analyze stocks. But now, you can access a wealth of information at your fingertips. Tools like Morningstar and Yahoo Finance make it easier than ever to assess a company's financial health. You can track earnings, study balance sheets, and even screen stocks for specific criteria like low P/E ratios or high dividend yields. Additionally, platforms like Seeking Alpha give you access to a community of investors who share insights and analysis. More advanced tools, like stock screeners and AI-driven platforms, can sift through vast amounts of data to find opportunities that match your investing strategy. Technology isn't just about speeding up the process, it's about making smarter, more informed decisions. The digital world has made value investing more accessible to the everyday person. So, take advantage of these resources, they'll help you make better investment choices. If you're serious about growing your wealth, don't forget to subscribe for more actionable advice on how to use tech to your advantage in investing. Conclusion: in the world of investing, there are no shortcuts. The key to real wealth is patience, research, and mental discipline. By focusing on value investing, avoiding the herd mentality, and leveraging modern tools, you can steadily grow your wealth over time. Forget the get-rich-quick schemes and the market's emotional swings. Value investing is a strategy built on real data, patience, and strategy. So, start small, stay disciplined, and let time work its magic. The money you make won't happen overnight, but over time, it will add up in ways you can't imagine. This is your blueprint for making money online through value investing. Simple, direct, and powerful. Take these principles and apply them, and you'll be on your way to long-term success.